Ulta Beauty is the largest beauty retailer in the United States. They have almost 1,400 stores in the US, and they recently announced that they are expanding into Mexico. And just a few weeks ago, I made a video about best and worst performing stocks in the last quarter, and Ulta Beauty was one of the worst performing ones. Now, what it means is that its stock price went significantly down, almost 25% down from its peak in February 2024. So, if we were speculators, we would say that it is a bad investment and that we lost 25%. But if we think like value investors, then we see an opportunity. This company is selling for 25% less. So either there is a serious problem with this company and the price drop is justified, or the market is overreacting. The problems are only short term and we can buy this company at a bargain. So let's analyze it, value it, and see which of those stories is more probable. If you were to invest $1,000 into this company 10 years ago, you could buy 11 shares, and now they would be worth something close to $4,542. And that is a gain of 354% in 10 years. So, a great result. But we have to always remember that past performance is in the past, and the future can be significantly different. Individual insiders, that is an X. 0.2% of the company is owned by individual insiders, and we would like to see this number over 2%. So unfortunately, the management does not have its skin in the game. And are individual insiders buying? That is also an X. We see a lot of sale transactions in the last year. Of course, there can be many reasons for selling, but this trend does not show a lot of confidence from insiders. And since we are mentioning the management, one of the reasons that the stock price went down so substantially is the fact that the CEO, Dave Kimball, warned of a slowdown and recently added that this slowdown has been a bit earlier and a bit bigger than we thought. And this statement triggered even more investors to sell the stock. Okay, and what do we know about super investors owning this company? That is a check. We see 2 super investors owning shares of Ulta Beauty. And are they buying right now? That is a check. Super investors sold 9,500 shares in the last quarter and bought 50,000 shares at the same time. So super investors seem to be taking advantage of this price drop. Return on invested capital, that is a check at 28.3% 10-year median returns. And such a return is absolutely great. It shows that the management is doing a fine job. And what do we know about net profit margin? It is a check at 5-year average of 9.5%. And the sector median is 4.9%, so we see a meaningful pricing power from Ulta Beauty. And now let's take a look at share buyback. It is a check. In the last 10 years, they bought back 25.4% of shares. That is great news for long-term investors, because if there are less shares on the market, each share they own represents a bigger part of the company and therefore is worth more. And the debt, it is a check. Ulta Beauty does not have any debt. And that is one of the things I really like about this company. It is growing nicely. It just started its expansion outside US, but it is doing all of that without any debt. So it is a sustainable and safe growth. Revenue growth, that is a check at 15.4% 10-year compound annual growth rate. So that is a nice result. And what is also important is the stability of this growth. If you have access to our Stock Ranking Pro, a tool I initially created for myself to find best investment opportunities, you can view a graph of Ulta's revenue growth, which shows it is very stable. There was a drop due to COVID, but they quickly got back on the track. And free cash flow growth, that is a check at 26.2% in the last 10 years. That is even more impressive. And earnings per share growth, it is another check at 23.5% in the last 10 years. So the growth of Ulta Beauty is happening organically without any debt. It is stable and quite fast. That does not happen very often. Price to earnings ratio is 16.1. So what it means is that we have to pay $16 for every dollar this company is currently earning. And even though that is not very cheap, the average PE ratio of the S&P 500 is closer to 27.5. Up from 24.8 last quarter and up from 23.5 1 year ago. So the market is getting more and more expensive pretty fast, but that is a different subject. Let's get back to Ulta Beauty. To value it, we will use a discounted cash flow formula and we will make 3 scenarios of its future growth. So in the low scenario, we will estimate a growth of 8% for the first 5 years and then 6%. In the medium, 11% and then 9%. And in the high scenario, 15% for the entire 10 years. So the low scenario is close to the predicted growth of beauty and personal care industry, which is 8.3% in the next few years. Medium is showing a story in which Ulta Beauty is growing a bit faster than its peers. And the high one is closer to the growth we saw in the last 10 years. But it is still lower than this growth, so we are trying to be conservative here. So with such estimates, the intrinsic value in the low scenario is $414, in the medium $512, and in the high scenario $725. But we have to always apply a margin of safety to those prices. I use a 30% one, and with such a margin we get in the low scenario $290, in the medium $358, and in the high one $508. And the current share price is around $411. So the low and medium scenarios with the margin of safety are in the red, but all other scenarios are green. It is possible that this company is somewhere close to its fair value. We saw that when it comes to financial health and growth, there are checks all around, so that is great. But to get even more info and to easily compare this company to other investment opportunities, we will use our Stock Ranking Pro. So here are all the companies we ever analyzed on this channel, and here we have Ulta Beauty. So let's go to the scorecard. And we can see that when it comes to financial health, it has a score of 2.5. And when it comes to growth, it has a score of 2.3. So these are really nice results. If we use a filter to only show companies with 2.3 points for growth or better and 2.5 points for financial health or better, we end up with only 4 companies out of over 90. So that shows that Ulta Beauty is an exceptional company. But when we open the company overview, we see what it is lacking. There are no dividends and investors' sentiment is not great, mainly because the management does not have its skin in the game. So even though it has some great results, those factors are something to consider. But the lack of dividends in case of Ulta Beauty is probably a good thing. They are investing the earnings into the growth of the company. They have enough cash not to get into any debt, and if they have something extra, then they are buying back shares and creating value for investors that way. So it seems like a sound and safe way to develop the business. Thank you so much for watching and see you in the next one.